stock of the day, we'd have a look at Adore Beauty, which has released its trading update. The company achieved quarterly revenue 47.5 million, up 4.7% on the corresponding period previously, as its active customer base number went up. It's on track to achieve EBITDA margin of 2 to 4% next financial year. Adore Beauty, listed basically during the pandemic to great fanfare. David Lane, what did you think of the update today and Adore Beauty as a stock?
Yeah, not a bad update. It was, I guess, positive to see an improvement in their EBITDA. I guess the concern that we have with not only Adore but many of the other companies in the discretionary retail area is that it is discretionary, and that we are in a period where we've got high interest rates, high inflation, and it's one of those areas where people have the ability to decide whether or not they're going to spend money on it. So that's probably our concern that we have. It's not actually a stock that Ords covers, so we don't have an official research coverage on it. But as far as the overall consumer discretionary stocks are concerned, we are fairly cautious on them.
Right.
Adore, as you said, came onto the market with a lot of fanfare. They've come down a fair bit since then, but it is still unprofitable. So it's probably one that we'd be steering clear of at this point in time.
Okay. David Novac, look at that, 670 down to 93 cents. I suppose you could make an argument, Adore Beauty is in, what was it, the old lipstick index that they used to talk about, that when times are tough economically, people need sort of little rewards that are affordable, like lipsticks. Is Adore sort of the Lovisa of makeup, like Lovisa is of jewellery, or could you use that as an argument or not?
Well, from what I could see, just reading the update here, is they've got a very strong loyalty following. They've launched a new campaign, a loyalty campaign and subscription service, which has brought back nearly 500,000 subscribers to their new app as well. So about 26.5% of their sales. So it's more like almost, well, I wouldn't use the word cult following, but kind of like you got that loyalty program they've got in place.
Yep.
So the same customers, but I don't see a lot of growth here. I mean, for the last 3 years, it's been pretty subliminal. If you look at the market cap, it's a micro cap. It's 87 million.
Right.
And the average daily turnover is like $27,000.
Oh, okay.
Worth.
So it's really thinly traded as well.
Really small. So this would not be an institutional investment for institutions, that's for sure. It's just very small retailers. So it's really in a void as far as I'm concerned.
Right, okay. Do you have that view on retail altogether?
Yeah, I do. I think looking where the Aussie dollar is, I mean, that's high input costs for, especially if you look at the leading retailers like JB Hi-Fi and Harvey Norman. We'll look at their update last week, down 9%. And they're doing a massive share buyback, which spiked the share price. But other than those leaders, in that area, I mean, with, like I said, the Aussie dollar being low, that's going to be more expensive for them, and their margins are going to be squeezed. Plus, you've got a slowdown in consumer spending with higher interest rates, and we've got the RBA meeting. I think there's a lot of uncertainty out there, and this is not a space you want to be in right now, the consumer discretionary.
David, are you in, are Ords keen on any retailers?
Well, there's a few that we quite like, but they're ones that have been fairly significantly oversold. I guess on the consumer discretionary side, we're a little bit to the side, if you like, and tend to like a lot of the car companies. So Eagers is probably one of our exposures to consumer discretionary, in that is a sector of the market that's been very, very strong and continues to be strong, and as well as travel. So we're actually seeing a lot of people, and our travel analyst likes to say that there's a lot of people that have been stuck in the last 3 years, and now their travel is no longer discretionary. So they're probably the areas that we're seeing interest rather than the straight retailers.
Right, okay.